Every month, I see the same thing on YouTube. One person says the market's crashing, and another person says we're entering into the biggest boom ever. And honestly, most of it is just noise because real estate markets are rarely that simple, especially right now. The Ottawa market is not collapsing, nor is it exploding either. What's actually happening is that the market is starting to split into different stories depending on the type of property. And I've been saying this for months in all my monthly reports. It all depends on whether you're in the detached market, a townhouse market, or a condo market. And they're all behaving differently right now. And if you're buying, selling, or investing, understanding those differences really matter. So in this video, I want to break it down. The good, the bad, and of course the ugly, using real numbers, real context, and no drama. So let's get into it. And if you're new to the channel, well, welcome. And if you're not new, well, welcome back. My name is Mark Belanger. I'm a realtor here in Ottawa, and I help people make smart, educated real estate decisions, no drama, just logic and a little bit of an investor mindset. Go to my website at markbelangerrealty.com. I have a bunch of resources there, including areas, a little bit of a quiz, some actual properties for sale, both on the residential and on the commercial side. I am also a licensed exempt market dealing representative, which means I have access to private market opportunities as well. All of that will come through on a phone call once I know what your goals and your objectives are. So I would encourage you to reach out, use the link in the description, and let's get into the video. All right, so let's really dissect what the issue is right now. Part of the confusion right now is that people are trying to process a lot of information all at once. You've got interest rates staying elevated. You've got inflation concerns. You've got slower job growth, recession headlines, and global uncertainty everywhere. So naturally, people are starting to ask, what does this actually mean for housing? And more specifically, housing here in Ottawa. And recently, the Bank of Canada held its overnight rate at 2.25% while acknowledging slower economic growth and softer labor market conditions. And Canada's unemployment rate also moved up to around 6.9%. So at the same time, though, inflation is still sitting above the Bank of Canada's long-term 2% target. So what we're really seeing is an economy that's slowing, but it's not collapsing. And honestly, that's exactly what the Ottawa housing market looks like right now. So let's start with the overall Ottawa market. Total sales were down about 2% year over year in April. But here's the bigger story. New listings jumped over 19%. Active listings climbed more than 17%. And months of inventory is now sitting around 3.4 months of inventory. That's a meaningful shift because inventory is now growing faster than buyer activity. And for the first time in years, buyers are starting to feel like they actually have some options again. Now, despite all of that, the average prices overall are still slightly up year over year at about 0.8%. And the median days on market also increased to 21 days. So homes are taking longer to sell. Buyers are becoming more selective, but prices overall are still relatively stable. And that's not a crash, that's normalization. So now let's start with the strongest segment in the market today, which is, as always, the detached homes. The average detached price in Ottawa is sitting around $863,000. That's basically flat year over year, down only 0.1%. And honestly, that's pretty resilient considering inventory has actually increased. Detached inventories rose roughly 12% year over year. And the months of inventory is now 3.1 months of inventory. And the median days on market is about 19 days. So detached homes are still moving relatively well. Why? Because detached homes still benefit from family demand, limited land supply, emotional purchase decisions, and move-up buyers. People still want detached homes, especially quality detached homes in strong neighborhoods. So now the key difference today versus a few years ago is buyers are no longer blindly chasing everything. Good homes still sell, but overpriced homes, well, of course, they're obviously going to sit. And honestly, That's probably healthier long term. The pandemic market wasn't normal. People were waiving inspections, waiving financing, making rushed decisions. This market is a lot calmer, more rational, and obviously more balanced. Now, like in previous months, we're going to be moving into what is probably the most interesting segment right now, which is the townhouse market in Ottawa. This is where affordability pressure is becoming very visible. Average townhouse prices were down roughly 3.8% year over year, and inventory jumped more than 35% year over year. And compared to 2 years ago, active townhouse listings have increased by more than 100%. That's a huge shift. Months of inventory is now sitting around 3 months, and the days on market continue to trend higher. So what's really happening here? Well, obviously a few things. First, monthly payments are dramatically different than what they were during the ultra-low interest rate period. The second thing is that the buyers are suddenly having more options again. And third, there's simply more competition in this exact segment. Now, does that mean that townhouses are a bad investment? No, obviously not, but it does mean the market is becoming more price sensitive and more rational. The days of throw it on the MLS and expect multiple offers in 48 hours are mostly gone. Pricing matters again, presentations matter again, and strategy matters more now than ever before. Now, let's talk about the segment that is clearly under more pressure right now, and we're talking about the apartments and/or the condo segment. Sales activity in the apartment segment were down nearly 6% year over year. Inventory climbed almost 42% year over year, and the months of inventory is now approaching 5 months. And the median days on market is now 35 days, and the median prices were also down around 3.6% year over year. That's a very different environment than detached homes. So why is this happening? Well, obviously there's investor caution, there's financing costs, there's a higher condo fees, slower investor activity, and buyers having a lot more options. And honestly, investor psychology has changed as well. When interest rates were near historic lows, investors were chasing almost anything with a little bit of yield. Now, they're becoming much more selective. And to be clear, this doesn't mean that condos are doomed. Far from it. There are still strong condo opportunities in Ottawa, but the gap between good product, good location, good pricing, and weaker inventory is getting much wider. So strategy matters more now than ever before, as the townhouses as well as the detached homes. So again, that upfront strategy is really key. And honestly, this is the biggest takeaway from this month's market update. Ottawa is no longer one market. I've been saying that for a few months now. Detached homes, townhouses, and condos, they're all behaving differently now. And that means buyers, sellers, and investors all need different strategies depending on the segment that they're actually in. And the people struggling right now are usually the ones using old strategies in a changing market. So if you're a buyer, this is probably the best negotiation environment that we've seen in years. Not because prices are collapsing, but because you finally have choice again. And if you're a seller, again, presentation and pricing matter. The days of just listing it and waiting for multiple offers are mostly behind us. And lastly, if you're an investor, there are definite opportunities forming right now, especially in segments where fear is starting to create negotiation room, because balanced markets usually create better long-term decisions. All right, I think I'm going to wrap up the video here, ladies and gentlemen. The Ottawa market isn't collapsing. It's actually evolving. And honestly, that's probably healthier long-term. Balanced markets create better decisions. And in markets like this, the people who usually do best are the ones who stay calm, understand the data, and adjust their strategy accordingly. If you want help understanding where you fit in this particular market, whether you're buying, selling, or investing, you can reach me directly. Use my contact link in the description below. Everything is there. I've mentioned it off the top. Start with the readiness quiz, book a call with me. Let's figure out where you are in the city, which geographical area. Let's do a little bit of analysis. Of course, we'll do all the comps, market updates, all the macro data, all of that kind of stuff, and we'll put you in a better position whether you're buying or selling, and we'll make sure that we negotiate the best possible scenario depending on which side of the ledger you're on. So I hope that was helpful. Stay tuned next month. I try to put these market reports out every single month. I try to put out 2 videos every single week. So again, I look forward to putting these videos out on a weekly basis. I hope you enjoyed it. Stay smart. Stay invested. I'll see you in the next video.